If you've spent any time researching or investing in private equity or venture capital, you've probably come across the terms accredited and non-accredited investor. For those of you who've not, in this video, I'll break down exactly what those terms mean, how they differ, and what types of investment opportunities are available to each type of investor. My name is Richard Guerra. Welcome to my channel. If you're interested in content related to finance, cryptocurrency, private equity, and political and business trends, be sure to like and subscribe to my channel, as I really appreciate your support. Before we dive in, a quick disclaimer: I am not a securities attorney or a financial advisor. The information I'm sharing here is purely educational and should not be taken as legal or financial advice. Always make sure to consult a professional before making any investment decisions. Okay, so what is the difference between an accredited and a non-accredited investor? Well, the official definition comes directly from the U.S. Securities and Exchange Commission, which is also known as the SEC. So let's start with their official definition of an accredited investor. An accredited investor can be either an individual or an entity that meets specific financial or professional criteria. For example, as it pertains to individuals, any individual with a net worth exceeding $1 million, not counting their primary residence, either individually or combined with a spouse or partner, would be considered an accredited investor. Any individual who can demonstrate 2 years of annual income of $200,000 individually or $300,000 jointly with a spouse or partner with a reasonable expectation to earn the same in the current year would also be accredited. For professional criteria, those who hold financial licenses such as the Series 7, 65, or 82, or any directors, executive officers, or general partners of a company offering securities would qualify as an accredited investor. Entities may qualify as accredited investors if the entity, including a corporation, LLC, trust, or 501c3 organization, owns investments exceeding $5 million or has $5 million in total assets. If an entity has all equity owners who are accredited investors, that entity would also qualify as accredited. Additionally, any registered investment advisors, broker-dealers, banks, or insurance companies, or even registered investment funds would also be considered accredited. Now, with that being said, what is a non-accredited investor? Well, it is anyone who does not meet the criteria that we just listed for accredited investors. And the standards are designed to protect investors without a certain level of financial sophistication or risk tolerance from getting involved in complex or illiquid private markets that the government assumes accredited investors can make informed financial decisions on, while non-accredited investors need more safeguards and disclosures to invest in safely. So what are the various investment opportunities available to both accredited and non-accredited investors? Well, it's different for each, but for accredited investors, the range of opportunities is significantly broader in what they have access to. This would include private placements under Regulation D, Rule 506C, which could be private equity funds, venture funds, hedge funds, SPVs, pre-IPO secondary offerings, certain crypto hedge funds and tokenized private investments, private real estate deals, both stabilized and development deals, and additional complex structured products in alternative assets. These investments are typically exempt from SEC registration and restricted to individuals or entities that meet the accredited criteria. While investment opportunities are more limited and closely regulated for non-accredited investors, they are not entirely excluded from participating in private markets. In fact, several SEC exemptions allow everyday investors to gain exposure into the private markets and alternative assets. These exemptions would include Regulation D, Rule 506B, which allows up to 35 non-accredited but sophisticated investors to participate in private placements under this rule. These investors must receive adequate disclosures and demonstrate a sufficient understanding of the risks involved with the investment. Additionally, it is required that the investment manager providing the opportunity have a pre-existing relationship with the investor in order to discuss the opportunity with them. The second option for non-accredited investors would be regulation crowdfunding, which allows non-accredited investors to invest in startups and private companies through online crowdfunding platforms, though investment limits may apply based on income and net worth. Another option would be Regulation A+ offerings, These are known as mini IPOs, which allow companies to raise capital from the general public, but the companies fall under strict compliance and regulatory standards to offer this type of investment. Whether you're an accredited investor or someone trying to become one in pursuit of financial freedom, there are opportunities out there for you. The key is to stay informed and continually educate yourself, and surround yourself with a community of like-minded individuals who are also equally committed to growth. That's why I want to personally invite you to join something new that we're building at Exponential Group. It's called Exponential Mastermind. This is a private community designed for investors, entrepreneurs, and business owners to connect, share insights, and grow together. And as a member, you'll get access to exclusive benefits, which will include investor chats, live town hall webinars, educational resources, and even private investment opportunities that are only available to those who are involved in the mastermind. I'm putting the link in the description. It's just $15 a month, but a small investment in yourself could be the difference in opening up massive opportunities for exponential growth in your finances and in your life. If you're ready to take the next step and join our community, we'd love to have you. Thanks so much.